Just
So I've understood, for the green candle where it opens and closes, and the red candle where it opens and closes. But
no worries. Yes, yes. Okay. So what I will do, I will just provide the one more way of understanding the candle. Okay. So if you look at my screen, I have projected a, a way how the candle formation is happening. Okay. So if you look at the left hand side, this is the formation of the red candle. Okay, and it is a very simple representation here. So if you just look at the starting point is number one. So I'm explaining how the red candle is being formed. Okay, so starting point is point number one, and this is the place where the candle or is starting to candle formation starts. Okay, then price move from 1 to 2 in upward direction, and again from point 3 to 4 the price comes in the downward direction, that is price is falling till 4, and again from 5 to 6 is more, it price moves up, and the 6 is the closing point, that is the end of the that time frame, and that is the end of the candle. Okay, so if you look at here, the from the place where it is start, like the candle formation getting, I mean started, that that place and where it ends, these 2 points makes the body of the candle. Okay, and in other words, it is all open and close from the starting point. Okay, whatever the I mean the price goes up, that makes the upper wick of the candle, and from the close point, whatever the price went down, that makes the bottom of the uh, wick, bottom wick of the candle. Okay, so yeah, I hope this bearish candle formation, I mean you can leave your comment in the chat box if it is clear, or maybe if it is still there is a doubt, feel free to ask. I mean, I'm okay to spend time on this one if anybody still has any question. Okay, great. And similarly, the formation of the green candle. Okay, so here the open point is point number one, where the starting point, the price start from 1 and goes below till point 2, and again from point number 2, I mean point number 3, it is again the same level at 2. Okay, price goes up till 4, and from again from 4, fifth point is 4, and fifth point is the same level, and price again comes down. So the from the starting point to the end point, this makes the body of the green candle, and any the move price movement below the starting point and the above the end point, that makes the lower wick and upper wick of the candle. Okay, so this is the easiest way to understand the bearish candle formation and the bullish candle formation along with the wick.
so,
And
Sachin, am I right in saying that red stands for a bullish candle and green stands for a bearish candle?
no, 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 it's a opposite.
Okay.
So red means the bearish candle where the price fall happening, and green candle is bullish candle. The in this case the price is going up. So if you look at the open and close in the bearish candle, open is high and close is low, and the bullish candle open is low and close is high. So bullish is all. I mean, just simple remember bull. I mean, is the bullish term came from the bull. Bear is that come from bear. So among the bull and bear, bull is always stronger. At least the stock market. In reality, maybe somebody can differ also. But in the stock, as far as stock market concerned, the bullish bull is the green and bearish is the red candle. Hope it is clear.
Clear, Sachin.
Okay, great. Thank you. Let's move further. So I think yesterday, or maybe somebody asking me some of the questions, and I'm receiving some of the personal message as well, that okay, looks like maybe someone having the expectations that okay, we are maybe moving really very slow, and maybe somebody is having expectations that like, we can finish in a couple of days and then the stock enter the market. Okay, but please try to understand that we spend around what like 15 to 20 years to get the formal education and the job, and then started earning, right? So whatever we spend at 15 to 20 years, at least we should be having some patience of learning couple of months, because after this we are going to directly earn the money, right? So one place is 15 to 20 years, and another place maybe couple of months. Okay, so please bear with me. It will take at least a month or so to at least to pass one level to start with. And again, after that, also there are a various level. Maybe after level one, we'll start learning how to maybe a crawl, or okay, and then walk, run, and the fly, right? Or similar, or in other way, we can say when once we complete our maybe +2 or something, maybe we can do some job. Maybe we can do some job after I mean junior high school also. But the level of job we get, it will be a maybe it will not giving the enough money, or it will be a labor based job where we'll be putting more effort and earning less. Next level maybe +2. Okay, maybe we'll get some better job with a diploma or +2. Okay, and then graduation and doctorate, and then so on so forth. So similarly in the stock market also, there are multiple levels of learning, and along with it we can start earning also. That is for sure. So learning is most important here, and then earning depends on how well we earn. Okay, so if anybody having those maybe some unrealistic expectation, please don't keep those unrealistic expectation. It is going to take some time, and I'm just putting my best effort to bring everyone from the zero level, maybe at least till the level I am at, and even more than that going forward, because I'm also learning something advanced. So once I'll share the whatever expected at the your level, and then I will keep on sharing the advanced level. Okay, hope I made myself clear in terms of the expectations. Okay, let's move further to last time yesterday session we have covered the bullish candlestick patterns. Today we are starting with the bearish candlestick pattern. So one simple bearish candle that we know, I mean any candle formation kind of this red candle, it is a bearish one. So we are going to learn the other bearish candle type. Those are inverted hammer, bearish piercing, bearish engulf, and evening star. So to start with inverted hammer. So as we learn about the hammer, okay, so it is just a reverse of the same candle. So in the bullish, and the hammer is the bullish candlestick pattern, where the candle or the solid part was up, and however in the bearish hammer, there is a longer wick upper side, and at the bottom there will be the bottom of the candle, and typically the size of the body or the of the candle is smaller, and the wick is around 2 to 3 times longer than the body. And here once again, the size, sorry, the color of the body of the candle does not matter. It could be red or green. In both the condition, it will be treated as inverted hammer. Okay. You will understand more, but in a simple term, understand that, okay, because in both the scenario, either red one or green one, overall the price movement is happening down. Okay, we will understand more and more going forward, but as of now, just understand this way, that if any candle formation is like in this shape, that will be treated, that will be called as inverted hammer, or it will be treated as one of the bearish candlestick pattern. Okay, moving to the next. Okay, one important usage of the candle is that they are considered as a potential bearish. That means the bearish possibility will be very, very strong, or the reverse also consider the reversal sign when it is found at the top of an uptrend. Okay, so don't worry. When I mean, this is the, as I said, the basic ingredients. When we are going to look into the charts and apply in the live market scenario or doing the chart analysis, we'll learn how to apply in more details. So as of now, identifying them is the most important. And hopefully today I will provide you some of the exercise as well. You can do it at your free time, practice it, and then we can have a dedicated Q&A session to clarify your doubts. So some of the example of inverted hammer are, so this is the one of the example of Adani Enterprise, the one of the most famous stock in the recent days. Okay, but this is the old snapshot where if you see that the top of this trend, there is a formation of inverted hammer. And after that, the price, the next candle is the complete bearish candle. So price moved very fast, right? And this is again the daily chart. And if you look at the volume also, the volume is also very high. I mean, we are going to learn separately volume, but as of now, see that if the candlestick pattern supported by good volume, it is treated, it is a more it adds the more conviction to the R prediction. Okay. Next one is bearish piercing. So it is just opposite of the bullish piercing, where the it is a combination of two candlestick pattern, where the first candle is a normal bullish candle, followed by a second candle which is the bearish in nature. In a typical, or I can say ideal situation, the second candle opens with a little gap up. However, it can also open at the same level as well. And the most important factor is that the second candle should close below the median of the bullish candle or the green candle. Okay, so in both the examples, okay, if you see that the second candle, and it's the first candle is a standard bullish candle. Okay, and the second candle, either it can start from the top of the first candle, or it can start at a little bit above from the first candle, and it should close below the median. Median means the half of the bullish candle. So this candlestick pattern will be treated as the bearish piercing. Some example from the live market is, so this is the Nifty 50 chart. Okay, if you look at these two candlestick pattern, so first one is the standard or typical bullish candle, a green candle, and the second one is the start little gap up and then closed below the half of the bullish candle. Okay, so this candlestick combination is the one of the good example of bearish piercing. Next one is the bearish engulf.
Sachin, can you go 2 slides prior? I don't know. I saw 2 slides prior. I saw something. I just couldn't judge.
In the bearish piercing or
Before that, before this as well.
okay, the hammer you're talking about.
Before this, I think that was the second slide of the day.
Second,
Yeah.
this one.
Yes, yes. Oh, sorry. I thought it had something. No, that's only. You can proceed. I thought it was something which I missed.
No, don't worry. You will not miss anything. I will not miss. I will not allow you to miss anything. Okay.
Okay, okay.
Yeah,
Sure,
don't
Sachin.
worry.
Thank you.
Okay.
Okay.
So bearish engulf. Again, it is the opposite of the bullish engulf. Okay, so it is that again the two candlestick pattern, where the first candle is a bullish candle and the second candle is the bearish candle. Okay, so if you look at these three example, okay, so first the bullish, the green candle is the common, there is no change in all these three examples. In the red candle, that is the bearish candle, it may open it may open at the same level, or maybe open, have a little bit, open with a little bit gap up, or it will open little bit with a gap down. Okay. So in all three situations, it will be treated as a bearish engulf. And a very simple way to understand is basically the bearish candle, that is the red candle, is neutralizing the effect of the green candle. So whatever the price movement happen in the upward direction by the first candle, second candle completely neutralizing the effect of the first candle in all these three situations. And that is why it is treated as a, a bearish candlestick pattern. And namesake, it is a bearish engulf candlestick formation. The example of bearish engulf is again the example from Nifty 50. And if you look at these two candle formation, this is one of the great or most ideal one. So it is not only the engulf, it is much more than, the second candle is even below lower of the first green candle. So it is a clear cut example of bearish candlestick pattern and the two candlestick formation, which is the bearish engulf. Okay, the next one is called evening star. So in the bullish pattern, we saw the morning star, and here is the evening star. So just to remember, you don't need to buy hard, but in case morning star, you can say morning is then a bull when your price is going up, evening is the down, when the price is going down, and it is the example of bearish candlestick formation. So it is again the three candlestick pattern, where the first candle is the standard bullish, that is green candle, and the second candle is typically a neutral candle, the smaller candle. Here we will learn first, but this kind of candle is called spinning top. We are going to learn after this one. So it will be a small candle with a small body with a smaller wicks, or it wick can be little bit longer also, but the body should be the small one. And either it can open with a gap up, or maybe at the same level. Okay. And the third candle will be a bearish, that is the red candle, which again open with a gap down of the, as compared to the second one, or it may be uh, kind of a similar level as well. But in the ideal situation, it should be having the opening should be the gap down of the, from the second candle. Okay. So this three, okay. And the third candle should close or must close below the half of the first bullish candle. Okay. So if there is a candle formation of such kind, it will be treated as the evening star. And again, if you look closely, it is again is a kind of the first example we showed, that the bearish piercing. Only the difference is that rather than having a two candle, the same effect is coming from the three candle formation. And again, as I said, it is the example of a bearish candlestick pattern. And some example of that evening star. So if you look at the first one is the green candle. The second one, okay, it may, somebody may say that it is looks like a hammer. But again, as I said, that it is stock market analysis, it is not an exact science. It is more of the art. So considering the three candlestick formation and the middle one, if you look, okay, it is a, considering these three candlestick formation together, it is more of the looking like a evening star example, rather than the looking at the individual one. And if you look at the second candle also, it may be is kind of a inverted hammer, which is, and there by alone also it is bearish candlestick pattern. Okay. So these were the 4-5 types of the bearish candlestick pattern. If anybody has any question regarding these examples, feel free to ask. Okay. So the next one is we have learned the bullish candlestick pattern, the bearish candlestick pattern, and the third type is called neutral candlestick pattern. Okay, so this is normally, I mean, these candles are normally small with the body and small with wicks also, sometimes longer wicks, but typically the bodies of these candles are small. Okay, and I mean, when it will happen, I mean, the market, when that kind of candle formation happening, when there is a kind of bulls and bears means that the some forces are going to fighting for to bring price higher and higher. At the same time, there are other forces which are working in the opposite direction, and both are having this equal forces. Okay, so it's kind of tug of war where the two teams are equally strong and none of them I mean exactly winning. So, and that in the, if such kind of situation is there in the market in any time frame, and that results the neutral candlestick formation, which doesn't give any result, and with in that situation we need to wait for the next candle formation, how they looks like in the market. So these are some of the examples, right? So one example is called a spinning top, where the, the candles are there with a smaller body and have the smaller wicks, maybe both the side. Okay, there are another example. If you next to that one is a small one, is not highlighted here. If you look at okay, so there is a just a wick and a very very thin body, or maybe almost no body, right? So yeah, if there is such kind of, okay, if you look at here, this green one, okay, so there's a wick up and down, and in the middle just a green line. There is a no body at all, or very thin body of the candle. So such examples are called as a doji. Here is the with a small, very small green body, and this side is the with red body. And there is a one more example of the neutral pattern is, if you look at in the middle. Okay, so by the name, it is called harami. I mean, it in Hindi it is a foul language, but it is not that harami. So it is the name for coming from the candlestick pattern type. Okay, so in this case, in this situation, there is a red candle. Okay, basically the bullish candle, and the green candle formation is happening in the kind of a middle of the this red candle. Okay, and that kind of candlestick pattern is called a bullish harami. So it is a very rare formation of those candles, but when it is formed and how to use them while trading or while doing the analysis, we are going to learn when we do the application of these candles. Okay. Now, we are going to learn about the volume. Okay, what is the volume basically? So, volume is, as I have mentioned earlier, at any point of time when the tradings and or the sell, buying and selling of the stocks are happening in the market. So, volume represents that. Okay, at the same time, how many number hours, I mean time, or in any time frame, how many stocks are getting sold or purchased. Okay, so for any pattern, a high volume provides the more confidence that okay, what is happening in the market, it is more convincing. Okay, so along with the chart in the investing.com or the tradingview.com, along with these charts, we can able to see the volume at the bottom. Okay, I'll show you in the directly in the chart itself. So um, so for example, let me share any one of your favorite. Let's see, maybe Infosys. Okay, so we need to add the volume. So if you see here in this chart, the bottom of the chart, if you see that red and green bars, okay, along with this candle, these bars shows the volume. So for example, if I select maybe a daily time frame, and let's take the today. Okay, today's market was closed due to Mahavir Jayanti, I believe, but our offices are not closed. Maybe some of the schools might have closed today. So if you look at maybe the today's not today, maybe the last day market basically. So if you hover your mouse and if you look at here against the volume, there are some numbers are getting displayed. So if I put my mouse to the yesterday's candle, and you can look at in the red symbol 5.243 M. That means 5.243 million stocks were purchased or sold on as on 3rd of April 2023. Okay. And the color here of these bars doesn't matter. It just simply takes the color of the candle. So that the color of candle is red, it shows in the red color. And if the color of the candle is green, it shows the green color. So it doesn't matter red or green. It's just to take the candle color. The main important thing to understand is that what it does represent. It represents the number of stocks purchased or sold in that particular time frame. So the time frame could be, as I said, daily, weekly, monthly, hourly. So if we look at the hourly chart also, and if you hover the mouse, maybe so for example, this green candle, okay, and it's the volume represents like 1.49 million. Those many volumes of shares has been purchased or sold in that particular time frame. Okay. So from the okay, so that is the volume. And what does it represents? As I mentioned, it represents it acts as an indicator. Okay, and that indicator confirms the trend continuation. For example, if there is a green candle or a bullish candle supported by the high volume, that means that it is very much likely that trend is going to continue as a bullish trend or the positive uptrend. Okay. At the same time, if there is a red candle or the bearish candle with high volume, that there is the high chances that that trend is going to continue in the downtrend. Okay, and if you look at this example, this is the example along with the support line. So there is a support line, and here one, two, and third place also it is a getting support. But after that, it is a support line breakdown is happening, and after this is the big formation of the bearish candle. And if you look down, there is a huge volume also you can see. So that confirms the trend at that particular time frame. Okay. Um, and there's one more point here. So how can we say that this is a very high volume? So typically in any if you look at any stock, along with the volume, if you can also see maybe some grayish line or the black line. So typically this gray line represents the average volume. So any candle which is uh, maybe any bar which is closing above this average line is treated as the high volume. I mean that is the higher than the average volume. Okay. So yeah, from the concept perspective, this is the end of the I can say unit 1. So we are in level 1. We have a 4 level. Okay, let me give you the quick summary of what we are going to learn overall. Okay, so this is the snapshot of our entire course. Maybe you can say the graduation course of the stock market. After that, also there will be a research and many other things that keeps on happening in the market. But this is the typical 3 year or 4 year diploma. I mean, not literally. I'm just comparing. Maybe somebody you might have done a graduation or somebody BSc or BCom or BTech. So maybe I have done my BTech in computer science, though. That's why I'm just taking the example of 4 year of engineering and which is matching with this example, right? So we are at level 1 here, and within the level 1, uh, we have just touched the unit 1. Okay, and unit 1 with the 2. So there are 3 more units in level 1, and after that we should be able to start taking the trade. And provided along with the completing the unit 1, we also need to complete couple of the I can say complementary or the supporting sessions. Especially one is how to use this platform that is called investing.com or the trading view. Both are the almost similar, um, but I find this investing.com more useful. That is the reason I use this one. Otherwise, I mean, you are free to use any one of this site, either investing.com or tradingview.com. So tradingview, I can able to just quickly show you how it just looks like. So can you please type in chat box that how many of you already using any one of these, either tradingview.com or investing.com? Anyone if you are using? Okay, so I'm assuming that no one is using TradingView or investing.com for the chart analysis. Or is there anyone who is doing any kind of using any kind of uh, charting platform to do the analysis? Okay, looks like I need to do the login. So as of now, I don't want to create any account in the trading view. So that's fine. Okay, screeners. Okay, screeners.in. Not a problem. So you can use whatever you want, whatever you like. But I mostly use the trade investing.com. So I can have a separate session on investing.com where it is analysis is very easy that I find it. Okay, so that is one. We can get. We can also um, I can also help you that how to set up your trading account if you are interested. Otherwise, you are open to use your own interested trading account, whatever you feel comfortable with. I normally use Alice Blue or Zerodha. So if anybody is interested, knowing the more detail about either Alice Blue or Zerodha, I can able to help you. So so we are now under the SISM, that is I named it Secret Ingredients of a Stock Market, that is level 1. Uh, okay, and it has the 4 modules. Sorry, yeah, 4 modules or 4 unit. 1 unit we almost completed. Then next level, okay, and after completing of the first level, we should be able to, maybe I can say, start crawling in the stock market. The second level, it will be again, if I can compare, it is giving with a more edge. Maybe we can, able to walk or maybe move little faster. Next one is the future and options made easy. So this is the and some of you are already asking about the future and options. So that part we will cover in the third level. Okay, because before coming to the future and options, we need to understand very well the first 2 modules. Okay, and the very advanced level is called I have named is ETA, that is advanced technical analysis using the some of the Elliott wave theory concept, where it will be, you'll be having the most advantage is to time the market. Time the market is that identifying the tops and bottom where you can get the maximum profits. Okay, good. Yeah, somebody asking, I want to know about the account opening. Yes, definitely. So I will have a separate session. If you are interested, you can join about this. How to open the accounts. So these will be the 4 different levels. Okay. So today I think we are almost done with the level 1. Okay, few of the Yeah, so if you have anybody has any question, maybe whatever we have discussed as part of the uh, session 1 or 2, feel free to ask your questions related to maybe the support, resistance, candlestick pattern, these things I think we have formally discussed so far. So if you have any question, feel free to ask, or even related to Dow theory, etc. So yeah, I will open the floor for the question, and then we can continue from there. Any question from anyone? Please unmute yourself and maybe put your question across. So looks like no question for today. So maybe we can wind up today's session early. I will maybe work on some of maybe some home assignment for you. You can work on those assignments and then post it to the your answer into the chat group. However, you may face one difficulty, because to complete the assignment, you should be knowing how to use this investing.com. Okay. So what I will do, maybe tomorrow's session, I will invest on explaining you how to use investing.com, and then you can try attempting those questions and sharing your answers. And if there will be any issue, maybe me and maybe some of my team will help you to if there will be any confusion or any help you need, we will be having the other session to clarify your doubts based on the question and answer shared. Okay, so I hope there is no question for today. So let us wind up today's session. Yes, please.
Sachin, that the first thing you taught us in the beginning,